Hello folks, LA Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey everybody, a quick video on this week's market, what happened. Essentially, the market just went up again, right? It worked its way higher. Russell was actually the only one that was weak. Bonds sold off, especially at the long end. And, the mega caps carried the day. You had some, big gains in the mega caps, AVGO, Meta. Those were the primary ones. And then, of course, NVIDIA being as large as it is, had a lot of weighting. But overall, the group gained, and they gained big. They carried the market higher. If we look at the primary indicators here, I went through, and you can read through all of this, but I went through and said, markets have patterns, they have rhythms, they can be timed. And a lot of times I think we forget that, right? And we just need to turn off the noise and concentrate on the charts. I mean, tape reading. When you look at my charts, what do you see? You see sideways horizontal lines, right? You don't see this kind of stuff. You don't see patterns most of the time, wedges, all the stuff that you normally see. And you definitely don't see RSI, crossovers, all this kind of stuff, right? MACD, etc. Why? Because those signals give you different signals depending on what kind of market you're in. When you're just looking at price, time, and volume, and you're like looking at the bars on the chart, you get a different read, and you get a clean read. If you can focus on it, right? You can just focus on what's the trend, what's driving it, what should happen next. If it doesn't happen, what's the reaction look like? You wait for those moments where you got an advantage and then you pounce. That's when you put the money on the trade. And those are the things that matter. There's too much noise out there all the time, just way too much noise. And so, I would encourage you to read through this, go back and reread the books. Think about the market from the perspective of it's telling us what's coming, not that it's reacting to what's happened. It's a testing process. The market is a testing process. It tests between the bid, and the ask, right? So you got people bidding at a certain price, you got people asking at a certain price, and whatever is in between, right, is the slippage. And so if you have a large supply here and a small supply there, then eventually this thing is going to rock to the downside, right? It's going to eat that demand up. If it's the other way and the supply is smaller and the demand is huge, then eventually you eat up the supply. That's the testing process. That's how it jumps to the next level, right? And then you find another level of supply, and this becomes demand. And that process just repeats over and over on every time frame you look at, whether you're looking at a 30-second chart, a 30-minute chart, a daily chart, a monthly, it doesn't matter. It's all the same. The process is the same. And those tests release information if you can figure out what's significant. And what's significant? Anchor bars are significant. So I go through a whole large thing using the SOXX, an example, and saying, what did we see on the SOXX, or at least what did I see on the SOXX that made me turn negative and start shorting it, right? And trading it on a short. And it was, started out with this hanging man. And then if you go over and look at the same week, at the end of the week, you had a bearish engulfing on the weekly. You're extended, right? You don't have any ABCDs in motion. If you look at it, you can see that a range has developed at this point, right? If you throw the retest regions on there, you can see where the retest regions are. And the fact that it hasn't came back, it's only been tested once so far. We may be able to bounce one more time out of here. The odds don't favor it, but they're not heavily against it. Now, if we break, this, especially if we go 3 more bars, this is going to end up a swing point low, and you're going to have 2 congruent ones, right? That could be a problem. That could send it much lower if it breaks. Those are the kinds of things you have to look at. Here's the support and resistance. So how do those get made? They're based on anchors, right? You got anchors that have to do with volume, and I point them out. You have anchors that have to do with wide price spread. You have anchors that are swing points. All of those anchors, when put together, that's what allows you to see what support and resistance is on any different time frame. And right now, we can see that these are the key numbers on the downside. That's the key number on the upside. And if it breaks above or below those, that's when you get a larger move, most likely. If I turn to the rest of the story here, mags are trying to push higher. They're helping the market. Sometimes I wonder, how does the market keep going up? Well, money keeps coming. Whether it's loans, whether it's new money, whatever it is, it keeps coming. And if I look at the sectors, we can see just how lopsided the market is. And this is a danger. This is a danger. NDX has been underperforming. Why is that? Well, it's so overweighted, right? You got like, what is that, 60-70% of it in 2 sectors, both technology related, right? And this has Tesla in it, which is technology as well. So you probably got 3/4 of the market in 3 sectors. 2 sectors plus Tesla. And if the XLK, right, starts to break down, this one's definitely going to take a hit. And we're going to feel it here too, because it's huge. It's not small. What's holding this market up right now? Financials, healthcare, discretionary, these have been helping. And the communications have been okay. So that's, in a nutshell, why we see all the strength we see. If we look at that XLK, we can see, and again, I don't draw these kinds of lines, but if you draw this kind of a line and you do it from a classical standpoint, you can see you got a wedge. The thing to me that's most interesting on this particular chart is these 2 swing point lows are very close together. They're congruent. When you get that, if you do get the break to the downside, that's going to escalate because there's going to be a lot of stops there. Again, going back to the testing process, what's going to happen? They're going to hit it. The demand's not going to be there. There's going to be a bunch of stops, which mean what? Selling pressure, which means you flush them out, right? You get a fast move down, and usually you get a bounce right back up. So that's the setup. The XLK being as heavily weighted as it is, that's going to have that impact on the market if it breaks that way. XLF is doing good, but this is a negative bar, right? That's not a clean bar. Then you get follow through the downside. Now you get the obligatory bounce. This thing's going to roll back over. Now, the good part about it is you got all these untested not ABCDs, but all these untested retest regens on the bullish ones on the downside. So what's going to happen? It's probably going to bounce. So you get into this, expect a bounce. You get into that, expect a bounce. That's just the way it's going to trade. If you realize that, then you can see what should unfold. And if it unfolds differently, then you can do something about it. If I look at the NDX, that's a bearish diamond type pattern, right? It should break to the downside. Doesn't have to. We've seen others not do that, but that's what should happen. If we look at the S&P's pushing up against the high. So we kind of got this divergence where the S&P's doing a lot better and we're seeing the NDX do. And what's that? Why is that? Well, because everything is so weighted heavily on tech in the NDX, and the tech has been struggling. Look at the dollar. Dollars hasn't done anything. Look at rates. Rates are pushing back up, pushing against 457, I think it is now. They're going to be a problem if they break out. That's going to be a big issue if they do. 469 seems to be the key area right now. You'll get some attention if it gets over 469 and sticks. Watch oil. Well, maybe not. Right now, the world looks like it's just flooded with crude. And this latest thing with Iran that's going on this weekend probably isn't going to push it back to the $100 a barrel level. So more than likely, it's just going to bounce. Now, I missed a great trade here that I wasn't focused on. This was a retest region right here that had not been tested before. It's way more than 6 bars. That's almost an obligatory bounce. It's going to bounce. What does it do? It bounces 13%. Probably 8 to 10% of that you could have pulled off the top had I been watching. Now, I am watching now because I see this one right up underneath, and I see this long tail. You know, the wick up here is pretty long. So I would expect we're going to drift back down there at some point, and that's going to be another buy area for a quick bounce. Earnings are going to be a big deal this time around. I would be focused on those. They're expecting so much, really hard to beat when you've got that much out there expected already and built into the market. If I go to the war thoughts, I've said over and over again, these guys are not going to go away, and they're not going to make it easy, and they're going to fight the U.S. all the way. It's not going to change, right? Back in '79, they did the same thing to Carter that they're trying to do to Trump now, and I think the world's going to pay a price as a result of it. If we look at the secondary indicators, MTTFs, you know, they're just getting more extended. Trend breadth starting to roll over here, so that's kind of curious. I'm going to see if we get that continuation on the roll. People are getting more neutral everywhere, neutral to bullish. That's probably not a good thing. So bottom line here, you know, the index is holding up well. S&P's working towards the swing points. You know, it looks to me, you know, overall take, choppy, rotational trade, plenty of frustration out there. Probably just going to continue to do what it's been doing. And that's where we're at. You have a great one. I'll see you next time.